Congratulations, you survived another historic week in the markets. If you weren't aware, this move that we had on Wednesday when Trump announced a 90-day tariff pause on all countries except China, this resulted in the largest single-day point move in the history of the US markets. So, I'm hoping all you investors and traders who are watching survived and did well. And if you didn't, that's okay. This is a time for you to learn from your mistakes. Hopefully, uh, reading reading up on some fundamental technical knowledge, watching videos like this to increase your skill set. Um, that's the name of the game. Don't give up. Learn from your mistakes. Connect with people who are successful, and you know, connect with them. Ask them questions. Figure out what they do, and see what you can derive from that, and have your own style. So with that, I always start off the videos with technical analysis on the S&P 500. The reason why I do that is because all stocks or most stocks are going to follow the trend of the overall market. So market analysis is very, very important to help you set your plan for trading and investing. I always start off with looking at one of my favorite indicators, anchored VWAP, or a VWAP Q, which is VWAP anchored to the beginning of each quarter. We had the new quarter start on April 1st. So whenever this happens with this indicator, you want to give it a day or two to kind of plot and see how price reacts to that new level. So although the first 2 days we closed above a VWAP Q, even if it closed below it, uh, I wouldn't kind of read into that. Um, but eventually, the market fell on Thursday, April 3rd. That made price close below a VWAP-Q, and we didn't really break above it actually until Wednesday. That was the first time we broke above a VWAP-Q since this downtrend started, basically. So that puts me more on a bullish short-term bias. And we broke above it, and we held it the day after on Thursday, and we held it the day after again on Friday. So we've been holding a VWAP-Q. We've preserved half point of this large green candle. So some technical background here. When you have a large candle, whether it's a bullish candle or bearish candle, in this case we had a bullish candle on large volume. See, this is the volume. This white line is a average volume, and I mean volume has been above average basically since April started. Even before then in March. But this bar had above average volume and it's very large. It's an engulfing candle. When you see candles like this, what you want to determine if this is actually a reversal candle or not is you want to see the halfway point of this candle preserved, which it was. This day we tested the halfway point, fell below it intraday, and buyers stepped in and bought it back up, closed above the halfway point, which kind of coincides with AVFQ as well. Same thing on Friday, which we just saw. So 2 days of holding this level, that increases my bullish bias in the short term. I think we're going to be seeing a rally from here um, for this reason and for a couple other reasons, which I will share in this video. It's basically I have some stock market bottom indicators that I've learned over the years that I find to be very reliable, and they were triggered this week. Um, And so people who are part of my free Discord channel were aware of those triggers and was able to, invest into their long-term positions this week to take advantage of a possible. And when I say market bottom, I'm not saying it's the ultimate bottom. No indicator can ever tell you that. Um, but it is a market bottom, and I'll show you. I'll show you soon. But before I get there, I also want to show the targets that I've been tracking since the beginning of this pullback here. Um, so I had a target at 10% 15%, 20%. Why did I choose these targets? Because typically when we get pullbacks that aren't a recession, you will see price fall from either as low as 10% to up to 20%. That's like typical. Um, Let me show you this chart. And so when I flip back to the charts, that's what you can see. We hit all the way to the 20% target. And what does this mean? This means that as an investor, because when a pullback happens, I get into investing mode mostly. I still trade, I still sell options. It's a great time to sell options during a downtrend because of a heightened volatility and heightened premiums. But I focus mostly on this is an opportunity to leverage my portfolio for the long term to the upside and buy in at great companies at a cheap price. So I had my cash reserves. Also wanted to point out something really quick because I saw some people on social media saying, "Oh, the S&P 500 entered a bear market, this week because we fell 20% from the all-time highs." If you aren't aware, the technical definition of a bear market is when prices close below 20% below the all-time highs, right? So which is about 490 on SPY. But the actual thing is that you don't count as a bear market until price closes below the 20%. We never closed below the 20%, so we still haven't entered a bear market technically. I just wanted to point that out and make that clear. So how would we know if we entered a bear market or long-term downtrend technically? So we can utilize the 50-day and the 150-day simple moving averages on the daily chart. It's going to be the blue line here is a 50-day and the green line is a 150-day. These are very powerful simple moving averages that you can use to determine long-term trend. And the idea is that when the 50-day crosses below the 150-day and both averages start sloping downwards of 10 degrees or more, that signals a longer term downtrend, which means we will see lower lows. At this point here, at this point, when we saw the 10 degrees are sloping, we know that this bottom that we saw here, we're going to see a lower low, which we did, until the reverse happens, where we see the 50-day cross above the 150-day and they both start sloping upwards 10 degrees. That confirmed the start of a new bull market. This was in January or February 2023. I personally invested very heavily here with the remaining, basically all cash I had left in my bank that I wasn't needing for, daily life. And in my brokerage, I put into the market here. And that turned out to be a great decision because that confirmed the start of this bull market. Where are we at now? The 50-day crossed below the 150-day. The 50-day is sloping downwards of 10 degrees, but the 150-day has not sloped downwards of 10 degrees yet, but it's close. It's getting close. So to me, we are going to find out very, very soon, within the next week or two, if we're going to see a longer term bear market or not. So let me show you my bottom indicators. So I want to show you the three bottom indicators that I track. Um, so this first one here, as you can see, there's two indicators. I'm not going to go into the specifics in this video because I want to try to just keep it as short as possible. But I have all the information on these three indicators in my free Discord channel. I'll put the link in the description. It's if you have nothing to lose, just go check. I have a lot of resources in there, a lot of studies that will prove very useful to you. So in this indicator, on the weekly chart of the S&P 500, when both of these drop below 80, negative 80 at the same time, that signals a market bottom, not the ultimate market bottom, but a market bottom. And this triggered basically the end of last week. And then this week we had the indicators return into this blue rectangle. That also confirms that this has confirmation now. So just to show you some past results of this was a 2020 COVID drop. Indicator showed a possible market bottom in March the week of March 16th, 2020, which ended up being the market bottom. In 2022, we had several indicators, several triggers, I should say. We had some that popped up in May of 2022, which was a good time to buy in the dip. Some in June of 2022, which is another good time to buy the dip. And finally, the final one in October 2022. So let's just say that, we have it triggered now, and this wasn't the ultimate market bottom. Objectively, it's a great place to invest in because this is going to be one of those lows that we see a rally from. And so far, we saw a big rally this week. It's not too late, by the way, to invest. Some people feel like, oh, I missed the good prices. Like the market's still down over 10% from the highs. You can still buy good stocks for good prices. If you want to know what price you should buy some stocks at, I also in my Discord have a valuation database where I share, 30 plus of the best companies in the US, like Apple, Nvidia, Microsoft, Meta, Eli Lilly, all those companies. I show you my calculated fair value that I've been using personally for my portfolio, which has been returning very well, again for free. So that's one indicator. The second one is going to be on the SPY daily chart, and specifically the SPY daily chart, and this is going to be the money flow index. And we had a bottom indicator popped up on April 8th, Tuesday, right before the big green candle. This was the perfect time to buy in. So that triggered. Again, so I'll show some past performance of this. This triggered on the August correction that we had, August 8th, 2024. Bottom indicator showed up. May 2024. Not on this bottom, right before the run up. That was a fantastic entry point. Even in 2023, when we had this 10% drop that went below 200-day moving average, it triggered on the final drop right here before this massive run up. Just saying, it popped up. These are very accurate bottom indicators. And last but not least, back onto the SPX weekly chart, we have this normalized ATR with volume percent R confluence. This did not trigger. Of the three that triggered, two of them, the other previous two did. This one did not yet. It was very close to being triggered, but did not. This one specifically tends to be like the ultimate bottom indicator too. This hardly ever lights up, but when it does, it tends to signal the market bottom. It signaled in March of 2020. It signaled in December of 2018 with the first trade war. It signaled in March of 2018. It signaled in October 2011. Basically, whenever it signaled, even 2008, which wasn't the ultimate bottom, but I mean, very, very close to it. This hardly ever, I mean, when I see this one trigger, I'll put everything I have in the market. Just kidding, don't do that. But I'm just getting excited, like I'll get excited and like be more confident into in my investments. So knowing all that background, where do I think the market's going to go? Well, I saw two bottom indicators trigger. We will get a rally. We don't know how long it will last or how high it will go, but we will get one. Seeing the steepness of this drop and seeing that we were not able to close below 20%, I think our upside potential is back to this 200-day moving average at 574 on SPY. Let's just say, okay, that's the upside target. What if we're wrong? What if it wasn't the ultimate bottom? We're going to head lower. If we head lower, we're going to enter a bear market. How long will that last? The average bear market will experience a 35% drop from the all-time highs and will last around 250 days from the market top to the market bottom, as you can see by this rocket sign right here. So that puts it at SPY at 400. Let's just say we're wrong. This wasn't the bottom here. We try to rally up the 200-day moving average. We fail. And then we begin our next leg down. We're going to break below this previous low that we saw, 481 or 482. And we're going to start heading lower, and lower. We can expect the market to hit to 400 by end of October of this year. if that's based off the averages of all the bear markets that we've had in the US history. So, yeah, the worst case scenario, we have a bear market, we bottom this year, and then we recover and start a new bull market. That seems so bad. As an investor, these are the times where you want to really focus on buying fundamentally good companies at these low prices and be smart and intentional about your investments, Have your cash reserves lined up, save money every single month, make an intentional effort to say, I want to, invest this much money into my portfolio and buy these stocks at these levels and time it so that you have invested as each of these increment drops. If we start breaking below 20%, start planning like, hey, we're going to hit down to 35% at least. Let's, plan for that. So that's to me, based off the technicals, where I see our upside potential and our downside. We're kind of at this crux, We're either going to rally up to all-time highs and this was a market bottom, or we're going to fail that rally and we're going to hit into a bear market or maybe even recession and have that 35% drop. That was kind of a long segment on technical analysis, but I really wanted to cover all that information. I thought it was very, very important to help paint a clear picture of where the technicals are at. Now, for some fundamental analysis, we had actually really good news this week. Uh, we had inflation come out on Thursday, April 10th, and I zoomed in so it's easier to see. We had inflation drop from 2.8% to 2.4%, almost half a percent drop in 1 month, 0.2% lower than the forecasted amount. Why is this good news? This is great news because right now the Feds have been working hard to get inflation down to their 2% target. Since 2022, that's what started the 2022 bear market. It was an increase of the rates. And end of last year, they started cutting rates. They cut rates 3 times, 50 by 50 basis points and 225 points for a total of 1 basis point decrease end of last year. Since then, we have not cut any rates. They were planning on cutting rates between 2 to 4 times this year until Trump unveiled his tariffs. And because the Feds were saying that tariffs will raise inflation, but it is transitory. And it's transitory because that's what happened in 2018 when they increased those tariffs onto China. Inflation went up and then went back down. So they're saying, we don't think these tariffs will repeat like a COVID kind of inflation surge, but it will delay our ability to reach the 2% target until like 1 or 2 years later. Probably, I think they said by next year, 2026, which means that rate cuts were off the table, which further fueled the market downturn. But now we're seeing inflation coming really close down to the 2% target. If the Feds deem it that this is the time where if they cut rates, inflation will continue this trajectory down with these 10% tariffs that we've seen in these 90 days, then they can bring rate cuts back on the table, even cut as early as June. And that will fuel a market rally. That confidence in the American economy and in American inflation and American labor market will fuel a rally. So my personal theory, which is just my opinion, is that after seeing Trump pause all those tariffs for 90 days and just leave a 10%, flat across the board tariff, with the exception of China, it was clear that a part of his intention was definitely to negotiate. That was made clear by his move. And so 90 days is a long time to pause. That gives a lot of time for inflation to come down naturally, because that 10% tariff is going to have a reduced effect versus like those 38, 40% tariffs that he was proposing on his reciprocal board. So if we see this trajectory of inflation decreasing at this rate within these 3 months, that's going to give the Feds a lot of room to start cutting interest rates and having confidence in the consumer. That is contingent on the labor market staying strong. So far, the employment rate has hovered in the low 4%. It hasn't changed. Hopefully, it does not change. No one wants a recession. Um, And so I think Trump has made very clear that he wants to cut interest rates since he took office. And I think that's what he's trying to really push for. So let's see what happens with that. But I think we can see a rate cut as early as June, as long as inflation stays on this trajectory and unemployment stays low. And we'll keep that in mind for the next FOMC meeting, which is quite a way. Yeah, quite a way away. That's in May 7th. We got basically a month to wait for the next FOMC. But let's see what happens. I'll end the fundamental segment with a reminder that earnings season started. We got kicked off with it with bank earnings, which came out pretty decent. JP Morgan is probably the most successful bank we have on the market, maybe next to Morgan Stanley. And yeah, they reported an earnings beat, up 4% on the day. Let me check Morgan Stanley. Morgan Stanley up 1.4% for the day with an earnings review beat as well. So that's a good sign when banks report good earnings. So we'll see what happens next. We have the mega caps coming up. Those are going to be very, very big, especially players like Apple and Nvidia who do business in China. Um, what are some possible outcomes? I mean, I don't know, but I think companies will, when they report guidance, will pretty much say, like, I don't know. They're not going to know how to forecast guidance. Maybe now with the pauses, they have a bit more room to forecast because now there's a 3 month pause. They can say, okay, we have 10% tariffs for 3 months. China has these retaliatory tariffs on them. So whatever it is, it's not going to be certain. So we'll really see how the earnings season plays out. Don't trade stocks over earnings. It's not a good idea because you're basically gambling at that point because there's technicals don't follow on earnings. It's either going to gap up, gap down, or stay flat. So just keep that in mind when you're trading. Look at the earnings day for the stock and make sure that your expirations on your options and all that end before the earnings date. I want to end this video just quickly going over the trades I took. I told all my members that I was really planning on taking advantage of these heightened volatility and this large market drop to sell cash secured puts because you're able to get really good premium with a really short expiration date for a really conservative strike price. And look at some of these I did. I did a 165 Amazon put expiring 4/11 on Friday, expired for 100% profit. Nvidia $85, Google $135, Tesla 160. I mean, the Tesla 160 one blew my mind. That would have been like a 30% drop in like 1 week, which I mean, I guess Tesla could do, but after a market drop of 10% in like a couple days, that's a very low probability. I still have some active trades going on for next week because since the bottom indicator's triggered and the VIX was still heightened, I wanted to sell more cash secured puts expiring next week. So I have a Nvidia $75 put expiring next week. I have a $90 put expiring next week for Nvidia. I have a Broadcom 140 put and an Amazon 145 put. Let's just say I'm wrong, the market heads lower. I mean, I would love to own these shares at these prices here. So if you are an option seller, you had a great time last week. It was very difficult for day traders and directional traders to make money last week. The market was very sporadic. So you as a trader, you want to have more than one trading style because the market goes through different phases, different levels of volatility, different directions. So you want to be equipped with different tools in your tool belt to be able to profit from different market conditions. If you want to learn more about options, I'm an option seller mostly. I post all my trades live in my Discord. So if you want to learn more about option selling, please join my Discord. Like I respond to people, I post, like I chat every day with everybody. I answer questions. If you guys want to request like a voice chat to go over some stuff, I've done that for my members before. Like I'm here to help. Like really, like I just want to help. Um, so so yeah, I'll put that link in description. Um, Moving forward, I'm going to be continuing to sell covered calls and cash secured puts to make income every single month. So far, I'm on track to return about 1.5% this month. I'm hoping for maybe a 2% return this month. Um, so yeah, Best of luck to everybody. Thank you for watching. I really appreciate it. If you found value, please like and subscribe. And I'll see you next week. One last thing. Uh, I understand that people might say like, "Hey, your bottom indicators, sure, like they triggered, but the market rallied because Trump did a 90-day pause on the tariffs. That's just like an anomaly." My response to that is that every market bottom has come on a freaking anomaly, all right? 2020, that COVID drop, I remember everybody was saying, do not buy stocks. The economy is halted around the world. We're going to go into global recession, global depression, blah, blah, blah. And then the feds come out and just like cut rates to zero and just like stimulate the economy like crazy. The market bottom triggered then. That was an anomaly. But you have to keep in mind that market bottoms happen on anomalies. Like, you got to ignore the news. Like, the news are important, don't get me wrong, but like, technicals matter too, because technicals show you what institutions are doing. That's ultimately why technical analysis matters. You want to be able to see where institutions are buying and selling, when they are buying and selling, and in a way kind of follow them. So, anyways, just wanted to kind of quickly slip that in there.